So is oil surging higher on fundamentals, or is it something else that's driving the price higher? Stephen Schork is president of the Schork Group and publisher of the Schork Report, and he's here in our studio today. So, Stephen, where do you come out on the speculation versus fundamentals debate in terms of the recent price action that we've seen in oil?
Well, let's put things into perspective. In the fourth quarter of 2009, ExxonMobil, the largest oil company in the United States, lost $3.5 million a day trying to refine $70 oil. Could not do it, lost a lot of money. All of big oil in North America, in Europe, lost a lot of money trying to turn $70 oil and making a profit. They couldn't do it. So now here we go. We're into the first quarter. Now we're into the second quarter. People like T. Boone Pickens, other large hedge fund managers, taking a lot of people's money, and they are throwing it at the market higher. So of course, T. Boone Pickens thinks we're going to $85 and $95. That's the way he bet. That's the way he bet in 2008
but Stephen,
as well.
I mean, but look at the economic data, not just here in the U.S., but globally. You look at some of the Chinese numbers that we've seen recently that people are finding encouraging. Doesn't that mean that there are going to be markets for this oil?
There are absolutely markets at oil at the correct price. Now, we know from recent history, the last time I checked, the United States still consumes the majority of the world's oil on a per capita basis. We know vehicle miles traveled, data published by the Federal Highway Administration, broke an upward linear trend in the third quarter of 2005. What happened in the third quarter of 2005? Hurricane Katrina, Hurricane Rita, plus $3 at the pump, first time ever. We saw that upward linear trend break. We saw it turn negative in early 2007 at the start of the recession. We know gasoline at $2.90 and $3.30, Americans don't like to buy at that price level.
So you think we are going to see demand destruction here and that's going to end up hitting the price of oil? But when would that happen if that's what's going to happen?
Well, at the rate we're going, and if Wall Street and the likes of Boone Pickens are correct and we do go to $85 and $95, now mind you, if we look at a simple statistical probability model, there is a very good chance we can hit $95. There's a good chance, a reasonable chance, we could hit $110 a barrel by the end of June. But $110 at the pump translates into about $3.50. So we are already on pace to be beyond the threshold where Americans cut back and we do see demand destruction. And mind you, if you see it in the United States, you will see it in Europe, and believe it or not, you will see it in China as well.
So if you get up towards those levels, are you then a seller of oil?
Actually, I already am a seller of oil. I'm actually buying the crack spreads. We have.
So you're talking your own book too. We got to be fair here.
Well, we're looking at an historical disconnection between where oil prices, and Mr. Pickens did pick up on it before. The natural gas is trading at more than double its historical relationship. If we look at it at a pure heat value, crude oil is trading at 250% premium to natural gas. So clearly something has decoupled here.
Okay.
I absolutely support going after more natural gas, but at the same point, I want to own gasoline. I don't want to own crude oil at this point.